Good afternoon, this is Neil with Simple Futures, and it's Thursday, pretty much the end of the week with tomorrow being a holiday. Report in the morning, non-farm payroll. Futures are open for a few minutes after, and then everything goes quiet for the weekend. In other words, extended holiday weekend. So, to me, I guess there's potential for a little bit of volatility maybe in the morning, but realistically, to me, the week is kind of over now. And nothing's really changed. So I'm just going to fall back on the same, message that we had previously, and that is still like the market, but, I'm trying to get it done from lower. On a retracement, that's all. And we'll need some volatility, some kind of, news or some impetus to kind of cause that volatility to bring us back where we can get this done. And nothing new to add, so I figured we may as well do something different tonight since there's nothing really new to update here on this front. I will say one thing, though. If you watch the IWM, it doesn't look the same. It really doesn't look as good. The Russell, I'm a little... This just does not look as good. I mean, the averages are stacked in a bearish fashion with the break. We're coming back into the mid to retest the averages at a voodoo snow line for... The way this looks like it's set is for a break for continuation beyond this last low, probably to test this snow line below. That, while it's in a squeeze with a ready aim fire sell, not the same picture over there, which I guess is good on one front, would help to be the catalyst to kind of cause the rest of the space to break for us to get that buying done from lower like I'm suggesting. That's not really what I had in mind though for tonight. Let's go look at the bonds. So here's let me go daily chart for the bonds. You can see they've been on quite the nice little uptick. I mean, just this week, 130 by 133. And this, of course, when the bonds are up, the rates are down. You read the news right now, you see mortgage rates have come in, rates are down. If you look at the Fed Funds Watch Tool on the CME website, you'll see that whereas previously there was a favor for the question uptick or pause at the May Fed FOMC, then it switched in favor of pause, and now today it's 50-50 dead even. That is pause or uptick 25 basis points on the May meet. And so the dollar is coming in on that, and with that the rates are coming in, and with that the bonds are headed higher. So here's the thing about this. We've now gotten, for the second consecutive day, closes above this very important 133.5 level. And that's important because it's what it is. It's an old end of quarter settle, which the way that I trade those is when you get two consecutive closes above or below one, you target the next. Well, this is above, so the next is 136.5. As long as that's true and continues the bonds in that direction, then the dollar is going to continue to break, and that means that we're going to like a lot of things, right? If the dollar's breaking, we're going to like, well, a lot of things. I mean, gold, silver, platinum, copper, crude, nat gas, corn, beans, wheat, cocoa, rice, sugar, cotton, lumber. I mean, the list goes on. Orange juice, feeder and live cattle, and on and on and on. And so you can chart the BCX for the BlackRock Commodity Index, or BCI for the Bloomberg Commodity Index, or on TOS, you'll chart $ SPGSCI for the Goldman Sachs Commodity Index, and look for any little minor lows there to be bought for uptick on the entire commodity space. So this chart and the dollar index are really pretty key for us now. This chart with the two closes above the 133.5 says target higher. 136.5 is target. That's a dollar. That's a breaking dollar. And that's bid on everything that we're talking about. For the dollar index, you can see that what it has done was break off the high, 115 high, for a near 382 retrace for what looks like coming back down for this fire line to extend. That would be my anticipation, is to extend this fire line, this last low, for lower as the bonds are upticking. The rates are coming in on the 50-50 pause for the May meet on the rates. In other words, the rates have just about hit their peak. The uptick on the FOMC's rate hike has either hit its peak or it's one more quarter point uptick away from being at its peak. So, and that's what you're seeing, 50-50 on the May meet. So watch this dollar index, a break of this voodoo fire, which is this 101.31. Looks for a break of that last low, which was almost the same price, for continuation breaking dollar. That's uptick on the commodity space. That's really the crux of tonight's video, is not so much repeat on the SPX, but yet let's watch the bonds and this dollar index for the next idea. And by the way, that breaking dollar and that uptick in the bonds is also going to be good for the equity space. So that translates also to higher NASDAQ and S&P. The Russell is not quite in the same shape, but it's good for the S&P. That's it. Good weekend, good trading, and I'm not around next week. I'm off next week, so I doubt I'll be doing any videos then, but we'll catch back up after and see where things are. Till then, take care and good trading.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me